Assalamu alaikum everyone. Good morning. This is AFM exam from September 2022 onwards. Section A. And the question name is Kingdom. Please open this. Let's start with the requirements. So let me open the requirements, guys. Discuss the feasibility and effectiveness of the defense strategies of selling of individual gardens and enhancing director remuneration. So there are two defenses which have been tested in this part. First is selling of the individual garden centers, and second one is enhancing director remuneration. Okay, that is of 7 marks. B part, prepare a report for the board of directors of the Kingtim company, which estimate the company cost of capital before the new bonds are issued. So we need to calculate current cost of capital using the current cost of equity, current beta, current KD. So we will calculate the company cost of capital before issuing the bond. Second part, estimate the market value and post-tax cost of debt of the new bond. You need to calculate the market value and post-tax cost of debt of the new bond. C part. Third part, estimate the revised cost of equity and revised cost of capital if the new bonds are issued. Guys, believe me, seriously, these 18 marks are much easier. These are very easy marks. If you have done enough practice, if you have taken all the lectures, if you have watched all the videos, these are seriously a piece of cake. So it's a very easy part. Next part, discuss the impact on Kingtim company cost of capital and the reaction of the equity and bond holders to the chief executive proposal. The discussion should include an explanation of any assumption made in the estimate part in B. So you have to make a report for this part. And remember, maximum professional marks are attached with this part. And what you have to write, what your headings, impact, first heading will be impact on the Kingtim company cost of capital. Second heading will be the reaction of equity holder. Third heading will be the reaction of bond holder. Fourth heading will be the assumptions, explanation of the assumptions. And fifth heading will be the conclusion, and the first heading will be the sixth means introduction. So your answer, your report should include the sixth heading: introduction, impact on the company's cost of capital, reaction of equity holder, reaction of bond holder, explanation of assumption, and the last one, conclusion. If any of you misses any heading, he will lose the marks. Last one, discuss the approach taken to employee remuneration by Kingtim company northern region and the issues associated with. Professional marks will be awarded for the demonstration of skills in communication, analysis and evaluation, skepticism, and commercial acumen in your answer. Guys, these professional marks are blessing for the students of AFM. All of the theory was previously tested in P4, and there were 4 professional marks. You have to write the answer in a similar way, almost in a similar way. But now there are 10 professional marks for it. These professional marks will help you to pass the exam. Those students who normally fail, unfortunately, in the range of 45 to 49, they can pass now by getting 50, 51, or 52 if they properly apply the professional skills. So how to apply it, we will learn in today's session. First exhibit. Kingdom Company executive director remain committed to the business. They are fearful of a takeover, believing that new owner will want some or all of them to leave the company. So directors are believing that if that company acquired by someone else, they will be kicked out of the company. They have therefore been considering possible defenses against a takeover bid. CEO has received 2 proposals from the directors. Sell individual gardens, which would particularly attractive to purchase. Disposal of these centers would make Kingdom Company overall less attractive purchases. If you remember, this was the crown jewel defense. Pay the executive directors higher remuneration and change their contract so that they would receive much higher compensation for loss of office if their contracts were terminated earlier. If you properly remember this as golden parachute. Kingdom Company CEO believes, however, that any defense Kingdom Company adopts should also strengthen the company future. She is therefore proposing to expand the company current limited sale of camping products in its garden center by establishing a chain of Kingdom Company outdoor shops. So you have a plan to open outdoor shops, selling and camping, walking and other outdoor equipment. The outdoor retail sector is competitive, but so please highlight this, outdoor sector is competitive. Then why are you entering in this business? So you will write this from the commercial acumen point of view. If the sector is competitive, then why are you entering into it? You have to work very hard in order to penetrate into this sector. But the CEO believes that Kingdom Company will be successful. How? What are the assumptions? Why CEO is thinking like that? It's just that the emotional issue with the CEO. He is hopeful that as we were successful in garden business, we will be successful in outdoor business, or something else. The establishment of the chain of outdoor shops would be funded solely by debt. The idea being changing Kingdom Company finance structure by having significantly more debt would make it less attractive for the acquirers. So you have to highlight this as well. Takeover defenses. Okay, I think we misses the first part. So let me read that. Kingdom Company is a nationwide chain of garden centers selling products such as plant, fertilizer, tools, and garden furniture. It was established 20 years ago, so you have a legacy of 20 years. By a current team of executive directors and achieved a listing on its local stock market 4 years ago. Selling listing, the company has made consistent profit and has been able to increase dividend each year. So you are continuously producing consistent profit and generate dividends. The executive directors collectively own 25% of the issued share capital. They own the 25%. The remaining shares are held by a number of investors, with none of them owning more than 10% of the issued share capital. 2 of the Kingdom Company major competitors have been taken over in the last 2 years. Media coverage suggests that further takeover are possible. Potential acquirers include other chains of garden centers, property developers, supermarket chain looking to diversify their business. As yet, no potential acquirer has approached Kingdom Company to buy the whole chain. Although Kingdom Company has had inquiries from other businesses wanting to purchase individual garden centers. Kingdom Company can sell a number of individual garden centers without threatening its continued existence. So there is a rumor that somebody will acquire your business, but nobody has officially approached you. Yes, some of the businesses has approached you for individual garden centers. Okay, next is Kingdom Company currently has 25 million shares with a current share price 5.6. It also has 0.45 million bonds in issue. These are the number of bonds, not the value. Each bond has a nominal value of 100, currently trading at 104. Premium on the redemption of the bond is 2% and KD is 4.1%. Company current equity beta of the garden center business is 0.9. Company plans to issue 0.6 million, 7.5% new bond. The 0.6 million is the number of bonds. each with a nominal value of 100. If you multiply 0.6 with 100, the company has a plan to issue $60 million worth bond. These bonds will be redeemable in 4 years' time at a premium of 8%. Coupon on these bonds will be payable on annual basis. The bonds are anticipated to have a credit rating of BBB-. The issue of the new 7.5% bond will not affect the market value of the Kingtum shares or the existing 6.5%. So that means new bond will have no impact on the existing bonds. The market value of the new bond will be determined by using information relating to the Kingtum company credit rating, the 4 bonds which the government has issued to estimate the Kingtum company yield curve. Detail of these bonds are as follows. So these are the spot yield of the government bond. These are the spreads on the BBB-. We know how to do that. Kingtum company plans to invest 60 million in the non-current asset for the outdoor shop. Currently, non-current assets have currently the garden business have a net book value of 150 million. So we can say that garden business is of 150 million, outdoor shop business is of 60 million. So this is the proportion of the business. And we need proportion in order to calculate the new cost of equity, the new beta. It is assumed that proportion of the book value of the non-current asset which will be invested in the outdoor shop and the garden center will give a fair representation of the size of each business within Kingtum company. The asset beta of a similar companies in the outdoor retail shop sector is 0.88. Before taking into consideration the impact of the new investment, Kingtum company forecast pre-tax cost of equity is 24 million. So garden business equity is earning is 24 million. It is estimated that new investment will make a return of 10% pre-tax and after-tax earning will increase by 1.125 million. Okay, the corporate tax return applicable to all companies 25%, risk-free rate is 4%, market risk premium is 9%. And last part, employee remuneration part is related to the last requirement. So we will read it later on. So let me move to the requirement. Let's solve the B requirement first, then we will discuss the remaining requirements. Okay. Because now you have the liberty to solve any requirement first. If you are solving the first requirement later on, you can copy the answer of first requirement by pushing the B answer later in the word page. So we will solve the B part first, then we will solve A and C part. So guys, let's solve the company current cost of capital before issuing of the new bond. The first requirement is company cost of capital before issuing of the new bond. So first part, this is part B, first part. We can say that this is appendix 1. Cost of capital or we can write just existing cost of capital. So currently we need to calculate the current cost of equity. Risk-free rate is given, return of market is given, beta is given. I know the beta was 0.9 and risk-free rate is 4%. And market risk premium is 9%. The market risk premium. So cost of equity will be risk-free rate into beta into risk premium. Cost of equity plus beta into risk premium. 12.1%. Cost of debt is given. Current KD, that is 4.1%. Now let's calculate the market values. $25 million shares into 5.56. 0.45 million bonds into par value. So the market value is equal to 184. So cost is equal to 12.1%, 0.41%. So WACC will be equal to 10.14%. 10.14%. So current cost of capital is 10.14%. Okay. B part. Estimate the market value and post-tax cost of debt. Market value is, yes, 104. Yes, absolutely right. 104. 0.45 into 104. 10.08. I think that's the correct answer. Market value was 104. Now it is okay, right? Okay, let's do the part 2. Part B, second, appendix, that is market value of new. So new bond interest rate is 0.7%, 0.75, nominal value 100, redemption value is at 8% premium. Spot yields are given. So let's calculate the new bond here. 1, 2, 3, 4. Cash flows. As this bond is paying 7.5%. And in last year, you will receive at 8% premium. 108. 115.50. Now, write the discount factors. Discounting at spot yield plus spreads. So first one is 4% plus 0.56. If you look at the calculation, this is 4% and 0.56. 1 plus, or you can even write in detail. You are not comfortable by solving in one cell. Write the spot yield 4%, 4.3%, 4.7%, 5.2% spreads. 0.56, 0.78, 1.06%, 1.35%. So Kingtim yield will be equal to discount factors 1 plus this yield raised to power minus 1. Present value market value per bond. So that will be equal to 109.92. 109.9. So discount factor is, this is the discount factor 4.56. 1 plus 4.56 raised to power minus 1. 1 plus 5.08 raised to power minus 2. 1 plus 5.76 raised to power minus 3. 1.655 raised to power minus 4. That's how I have calculated. Okay. Now let's calculate the KD of the new bond. We have calculated the market value. How to calculate the KD? KD of new bond. It's very easy to calculate the KD. Write the years 0, 1, 2, 3, 4. Write the cash flows. Put the market value as a negative number. And write all the $7.5 into after tax. What was the tax here? Tax was 25%. So 7.5 into 75%. And in last year, you will have to add 108 because bond is redeemable at premium. Now calculate the KD of bond. That is equal to by calculating the IRR. .71% is the answer. 4.71 is the KD of the bond, IRR of the bond. There is no need of choosing lower rate, higher rate, and then calculating the answer by simply writing this. This is the KD. This is after tax KD because I have taken the after tax value of coupon. This is the after tax KD. Okay. Simple. Write the formula. IRR, bracket start, select all cash flows, press enter. Magically, you will calculate it. Now let's calculate the market value. Okay, that was part number. I think we have done that part. Market value and post-tax statement. Now let's solve the next part. Third, estimate the revised cost of equity and revised cost of capital. Revised cost of equity. So part 3, index 3, revised cost of. So we have now two businesses, garden center and the outdoor shop. So we need to calculate the beta of both. So first of all, estimating beta asset of garden center. What was the beta equity? 0.9. What was the old equity? And what was the old means existing. I think more suitable word will be existing or current. So let's calculate the beta asset. You guys remember the formula, right? Beta equity into market value of equity divided by bracket start market value of equity plus market value of debt into 75% after tax value. So it will be 0.72. 0.72 is the beta asset, guys. So what is the beta asset of outdoor shop? 0.88. 0.88. Now let's try the proportion. Beta, combined betas. Beta asset of garden into its proportion. Garden proportion is 150. Divide by 150 plus 60. Plus 0.88 into 60. Divide by 210. So combined beta asset will be 0.76. 0.76. This is the combined beta asset. Okay. Right. Now re-gear it with new gearing. And new equity will be same. We will assume that new equity will be same. And what about the new debt? There will be two debts now. Existing was 46.8 and the new one is market value is 109.92 into 0.6 million bonds. So new debt is 112.75. 112.75. Right? Guys, the value of total debt 46.8 plus the new debt. This is the, you can say this is the total debt. So new equity is 139, new debt is, total debt is 112.75. So let's regear it. Let's calculate the beta equity. Beta asset into market value plus debt into its after tax value divided by the equity. So beta equity will be 1.23 and cost of equity will be rest date 4% plus beta into risk premium. So it will be 15.07. So now let's write the market values. Equity market value is same, by the way. $139. Existing debt market value is 46.8. And the new debt market value is $0.6 million are the bonds into 109.92. So this is the market value of the bond. Total will be $251. Write the cost here. Cost of equity is 15.07. Existing KD is 4.1. And the new KD is 4.71. So now let's take the average of these three. Now let's calculate the WACC. That's how you will calculate the revised WACC. 10.32 approximately. Okay. Why WACC is increasing? We have covered in our basic lectures, whenever company increases the level of debt, according to the theory, when we increase the level of debt, WACC should decrease. Why WACC is increasing here? Is it not the contradiction of the theory? WACC has increased from 10.1% to 10.3%. Why cost of capital is increasing? What is the abnormal behavior? Abnormal behavior is previously cost of equity was 12.1. Now cost of equity is 15.07. Why cost of equity is increasing? Previously beta was 0.9. Now the beta is 1.23. So that means additional, the outdoor shop is risky. Outdoor shop is riskier. Because of the new business risk, your cost of equity has increased. Plus, the previous debt was at 4.1% KD. The new debt KD is 4.7%. So you are raising the new debt at a higher cost. That's why your cost of capital starts increasing instead of decreasing. Even according to the theory, it should decrease. but it is rising. Why? Because of additional business risk and because of, and why? Because of financial risk is also increasing. That's the reason. Okay, let's make the report, guys. Let's please see the last requirement. Discuss the impact on the company cost of capital, reaction of shareholder, bondholder, and the assumptions. So let's write the report. Simply write to the board of directors. Report to board of directors. Kingtim. Obviously, you will write this part B 1. And when you will solve the part A, simply write the part A here and push this below. You can write the subject or you can totally avoid this. Subject is report. Report on report. Or discussion change in cost of capital reactions of investors and reactions of this. Introduction. This report covers the impact of new investment in outdoor shop and its financing the additional debt. This report covers the impact of new investment in outdoor shops and its financing with additional debt. It also considers the impact on cost of capital and reactions of shareholders and debt holders. It also includes the assumptions taken to estimate all calculations of one in appendix so that's the introduction. Obviously you can write in your language as well, in your wording. So now we will discuss the impact on the cost of capital. So the first is discuss the impact on the company cost of capital. Impact on Kingtim Okay, guys, what we will write here? Anyone? What is the impact on the cost of capital? Anyone? Guys? There are two impacts on cost of capital. First, WACC has increased from existing level from 10.1% appendix 1 to 10.3% appendix 3. Okay, you can write in this way. WACC has increased from, there are two possible reasons for this increase. First is cost of equity has increased from previous level significantly because of additional business risk of outdoor shop. Business risk of outdoor shop is higher as beta asset is 0.88 appendix 3 compared to given beta asset of garden shops 0.76. It's not given, it's calculated compared to calculated. Same appendix 3. So beta is also higher. Second, financial risk has also increase because company is raising all funds from debt. So increase in financial risk and business risk leads to increase in cost of equity. So that's the number one reason. That's the number one reason. So what is the second reason, guys? Company has raised new debt at higher KD 4.71% compared to existing debt KD 4.1%. Although, however, higher weight of debt will push the cost of capital downward, but overall KE and KD, overall new KE and KD are so high that new WACC has increased instead of decreased. So that's the reason. Although we know that if you raise new debt, obviously it will push the WACC downward because weight of cheaper source of finance has increased. But here in this case, overall KD and KE are so high that the cost of capital will start increasing instead of decreasing. So that's the impact on the cost of capital. So next is reaction of shareholders. So guys, what are the reaction of the shareholders? So you have to write the reaction of the shareholders. Okay, what is the return of the previous investment? Previous investment was 150 million and the earning was 24 million. So guys, what is the return? What was the previous return? If you divide 24 over 150, what was the previous return? Please tell me. 24 over 150. 16%, right? Shareholders will show concern on the rate of return of new investment. As return on investment of existing business is 16%, 24 over 150 as before tax. And new investment will only generate 10% return. So why you will invest in this kind of business? Shareholders will raise question that why company is investing to earn 10% by raising funds at 7.5% coupon. You are raising funds at 7.5% coupon and you are investing at in the market to raise 10%. That's the number one concern shown by the shareholders. Number two, shareholders will also show concern on higher level of business risk and financial risk of after investing in outdoor shops. Higher level of business risk is showing that outdoor shops is a risky business, as it was stated that market is already competitive. And the question is whether this is a professional acumen. Question is whether business will be penetrate in this intense market and will able to generate enough cash flows to any other risks faced by the shareholders? Anyone? Shareholders will also be concerned about higher level of debts, as financial risk is rising. Debt holders may apply some covenants which will ultimately threatens the return of shareholders, as one of covenant will be the one of the covenant will be the stoppage of the dividends. Dividend discontinuation. Okay. So what will shareholders do? Because of so many risks, what will shareholders do, guys? What will be the reaction of the shareholders? What will they do? So in reaction, shareholders may start selling their shares. This may create panic in market, and share price of Kingtim company starts falling. It will further increase the problems for company as gearing will increase and financial risk will also increase. This will also create bad reputation for company and difficult for company to raise new funds from equity. Next is reaction of bondholders. So guys, what will be the reaction of the bondholders? Anyone? Bondholders will show concern about the increased level of debt. They will be concerned that how company will pay back higher level of loan. Okay, they will be concerned about the debt level, high level of debt. They will be concerned about that how company will pay back the loan. Obviously, it will create issue on both of the loan, the previous one and the new one. Existing loan will be paid back in 3 years' time, and the new loan will be paid back in 4 years' time. After 3 years, okay. Next, one more important point: bondholder will also worried about the higher risk or higher business risk, because If business is risky, it will raise the question, how will they pay back loan in difficult times? Bondholders will also be concerned that how company pay back loan in 2 years time, how company pay back all loan in 2 years, in year 3 and 4, because old existing loan will be paid after 3 years and the new loan will be pay back in 4th year. So how will you raise funds in 3 and 4th year, and how will you able to pay back all the loan? Then you will discuss all the assumptions, guys. And the last part, then you will discuss conclusion. And then you will write the report compiled by and date. So anyone, what you will discuss in assumptions? What you will discuss in assumptions? Anyone, guys? Number one assumption. It is an assumption. So I'm not writing, I'm just explaining here. Number one assumption, the company is thinking, company is estimating that they will earn 10% return on the outdoor shop. You will write that in a highly competitive market, you are assuming that you will able to earn the return of 10%. You should also consider the approaches of the competitors, the reaction of the competitors. If the competitors enter into that market, you will not be able to earn the 10% return. Although you have written the assumption, but you also have raised professional acumen that how you will be able to earn the return of 10%. Okay. Yes. Another assumption. You will write that you have used the kappa model and you have calculated the beta by considering, you have calculated the revised beta by considering that market value of the equity will remain same. So you will write here, you will raise the professional skepticism point. Why market value of equity will remain same if there is a considerable increase in business risk and financial risk? Although you are writing the assumption that market value of equity will remain same, at the same time you have raised your professional skepticism point. Third, you are using that the non-current assets will reflect the weight of garden business and the outdoor business. So you will raise the question that whether it is a true representation of the size of the businesses in which company has invested. Then third, you are assuming that the 0.88 beta asset of the outdoor shop is reflecting the risk of the outdoor shop. So the beta asset of the proxy company is showing the true risk of your business. So that's the assumption. You can also write that the market value of the existing bond is still remain the same. You will raise the question here, if there is a considerable increase in financial risk, the existing market value of bond will not remain same. So that's the assumption you will write, guys. So what will be the conclusion? You will write the conclusion, although it is, you will write that although company wants to invest in the outdoor shop business, but it seems like company may face problems in the future because of the business risk and the additional financial risk. Company should discuss, or company should make a plan how the company will pay back the loan and how the company will satisfy the concern raised by bondholders and the shareholders. That's the conclusion you will write here. Now you will write that company has a plan to invest in a new business, outdoor shop business, but the new business will increase the business risk and the financial risk. So company should make a clear plan that how company will pay back the loan and how company will satisfy the concern shown by the bondholders and the debt holders, shareholders. Okay, guys. I think I have made enough points. I have covered almost all of the points here. So if you have made the proper format, report, introduction, proper headings, you will get full marks on the communication part. And if you have shown the numeric part here by referencing with the appendix, and you have properly used the calculation part in your analysis, you will get full marks in the analysis part. And if you have inquired further information, like which we will in assumptions, and if you have raised the question on the commercialization of the project, that you will get full marks on the commercial acumen. Okay. If you make a proper format, if you use the proper wording, you will get full marks on the communication part. 5 marks will be from the communication part, guys. Out of 10, 5 marks will be from the communication part. Got it? Okay, next. If you have properly used the numerical part in your report, in your analysis, you will get full marks on the analysis scale. And if you have inquired further information, and if you have raised a question on the commercialization on the project, like professional acumen, you will get full marks. Any question? Anyone? Any question? So guys, this is the article written by the examiner. Advanced Financial Management, read the mind of an AFM marker specimen exam question number 1. The same question which we have solved. Introduction, I am the member of the team who marks Advanced Financial Management. This article is designed to give you the candidate and insight into my mind so that you can better understand what a market will be looking for when it comes to marking your Advanced Financial Management script. Insight into markets thinking, appreciating what we are trained to look for, what we award marks for, the reason why marks may not be awarded will help you fulfill your potential and gain the necessary marks to pass. It will help you appreciate the point that will attract marks so that you can better assess your answer. This article uses the 3 candidate answer, question number 1, 2, 3, and we will solve the question number 1. So that's the question, guys. So please read this. Question number 1 contains the number of requirement, as is usually the case with a 50 marks question, and require the preparation of the report of the board of directors It also requires the use of numerical technique to calculate cost of capital and discuss finding. For the discussion element, each relevant point will generally be awarded 1 mark. Although a well-discussed point can be worth 2 marks, remember, however, that to discuss means to consider the pros and cons. Like, as we have written, every point should have the pros and cons. For the calculation part B, each part of the calculation will generally be awarded 1 or 2 marks. A good answer to part 1 would be looking at each defense strategy in turn and separately consider the feasibility. Good answer to part B, 1 and 3 would take a methodical approach with clear and easy to follow working. Good answer to part B4 would discuss the outcome of the calculation and what this would mean for both the shareholder and the bondholder. So let's go to the question. Examiner has marked 3 candidates. So this is the, look at the B part, guys. This is a report prepared by a financial consultant and to the board of directors. So this candidate has written prepared by at the top and date at the top. So don't worry about that. You can write the date and compiled by at the top, yeah, and even at the bottom. That's not the issue. So this is the introduction. He has used 3 to 4 lines for the introduction. Then company cost of capital, appendix is given, market value appendix is given. Impact on the Kingtim cost of capital and the reaction of shareholder and bondholder. He has written all the impacts in a single heading from further gearing to this point. Then write the conclusion. So please tell me, how do you see this report? Is it a good report, bad report, or the average report? What is your thoughts, guys? You are obviously you are preparing for the exam. You have solved many questions. What are your reaction? Clearly, introduction heading is given. Clearly, heading of reaction of the cost of capital and reaction of the bondholder is given. Clearly, conclusion is given. I'm not reading the report, but I will tell you that this candidate has written a very good report, a very good text of the report. I'm not telling you the first impression. I'm telling that he has written the good material in the report. So, okay. So that's the number 1 candidate. Let's move to the candidate number 2. This is the candidate number 2. So report is introduction, financial result by proposal, non-financial aspect, assumptions, debt holder, equity holder, and conclusion. So what are your thoughts on this report? Is it a better report compared to the previous one, or it's the lower rated report compared to the previous one? It's a weak, right? It's a lower graded compared to the previous one, right? Although this person has separately given the headings, but still first impression is this is a weaker report. First report was better. Okay. Let's move to the third report. This is the third report, part B. Part B, you're looking at the report, right? This report prepared to evaluate. Okay, report is ended. So if I'm asking how will you grade the report? First report, second report, third report. What is the best one? Which one is the best one? And which one is the worst one? First one is the best and which one is the worst? Last one. Okay, look at the examiner marking here. Last report, communication marks 3, analysis 1, skepticism 0, commercial acumen 1. Guys, still He has not made any heading. The last candidate has not write to the directors, heading, introduction, subject. Still, he able to get 5 marks. And you people were worrying about the AFM exam. Come on. So this is the professional skill summary. This candidate has demonstrated some communication skills and has obtained 3 marks. This is because the format and structure of the reports have not been fully adopted. However, the style, language, and clarity of the answer are reasonable. The report is effective because the answer is specific and the relevant, and it also adheres to chief executive proposal. For analysis and evaluation, there is insufficient use of the data to determine suitable calculation. However, there is a use of the data to draw an appropriate conclusion, although not much support for the discussion and no clear demonstration for the judgment. For skepticism, there is no real focus on skepticism in this answer, no challenge to the information. You have to challenge to the information in order to get the professional skepticism. In terms of commercial acumen, there are examples of using practical consideration to make commercial points. Altogether, this shows some demonstration of the skill would be worth 1 mark for the commercial acumen. And what about the first report? First report, candidate able to get full 10 professional marks. 5 for communication, 4 for analysis, although 0 for skepticism, but he able to get a total 10 marks. Please read this. Candidate has demonstrated very good communication skill. Even we have highlighted that, sir, this report can be better by separately discussing the equity, bondholder, and cost of capital reactions. This is because the format structure of the report have been met. The style, language, and clarity of the reports are very good. The report is effective because the answer is specific, relevant, and also adheres to the chief executive proposal. For analysis and evaluation, there has been a good use of the data to determine suitable calculation, good use of the data to support discussion, and also to draw appropriate conclusion. For skepticism, there is no real focus on skepticism. He didn't challenge anything. In terms of commercial acumen, there are a number of examples of using the information from the scenario and also practical consideration to make commercial points, such as timing of the sale of individual center, consideration of the need to repay the loan. Like consideration of the need to pay the loan means how will the company will pay back the loan in year 3 and year 4 combinedly in 2 years time. Altogether, this shows a reasonable demonstration of the skill. This gives a total 11 marks, but as there is a maximum 10 marks, so this is capped at 10 marks. So 5 marks are only available for the professional skepticism. 5 marks. Communication. Okay. So now I think you can easily able to get the professional marks. What is your guys thinking now? Anyone? What is your reaction now? One thing is very clear. If you are making the format properly, and if you are using an appropriate language, you will be able to get the communication marks. And if in your answer, you are using the appendix X, you are giving the reference to the appendix X, you are using the proper use of your numeric to discuss the answer, you will get the analysis marks. And in your answer, if you are discussing the assumptions and you are challenging the information given, like I have challenged the information given that chief executive officer is thinking that company will be able to earn earn 10% profit in the outdoor shop. You will challenge the information that market is highly competitive and highly risky. How the company will be able to earn in this
type of market. By having higher financial risk and higher business risk, you are challenging the chief executive proposal, you are challenging the information, you will get the skepticism marks. And you will write the professional commercialization point here, that like if how the company will, how the shareholders will decide to invest in the new project when the previous project was earning 16% and the new project is only earning 10%. That's the professional acumen. That's the commercial acumen. How an investor will agree to such a idea that previously you were earning 16, now you will earn 10%. And by raising loan at 7.5% coupon. So guys, if you challenge the information, if you write on the commercialization of the project, you will get the commercial acumen and the professional skepticism marks as well. So seriously, these 10 marks will be able to, will help you to score the maximum professional marks. Conclusion, I think if you write the conclusion, you will get the marks in professional communication. In communication, you will get the marks of conclusion. Let me open the answer. Cost of equity 1 mark, value of equity 1 mark, value of existing bond 1, WACC 1, spot yield curve 1, value of new bond 3, market value 1. Okay. Up to 2 marks for each well-explained issue. These are professional skills. Maximum 10 marks. Okay. You will get the marks in professional communication. Guys, you have to solve the A and C part. And also you have to write the assumptions and conclusion by yourself. You will be able to do that, right? Okay, perfect. Thank you so much for joining in. Tomorrow we will solve another question on another topic. And please, it's a request. Start reading the theory, start writing the theory, so that you will be able to write all the answers in the exam. Thank you guys. Hopefully you have liked the lecture and you will now start preparing for the exam. I will, Musawwir, it depends. Because we have already solved 2 questions on the 50 marks. So I will tell you that which question we will solve, so that you guys can see or solve that question in advance.